Hello. Today is Monday, July 27th, 2026. Here is your daily signal. According to Bloomberg, rising tensions in the Red Sea and the ongoing conflict with Iran are sending shockwaves through global energy and trade flows, with escalating Houthi attacks and U.S. military threats dominating the headlines. The Red Sea is an essential maritime corridor, where around 12% of global seaborne trade traverses through the Suez Canal, making uninterrupted passage critical for both Europe and Asia, the world's leading importers of energy and manufactured goods. With Iran's continued support for Houthi militants and a recent blockade declaration targeting Saudi-linked shipping, attacks have increasingly disrupted supply chains since late 2023. Key shipping giants like A.P. Moller Maersk and Hapag-Lloyd have had to reroute vessels around Africa's Cape of Good Hope, raising costs and delivery times, while major insurers including Lloyd's of London have hiked premiums for passage through these volatile waters. Maersk warned this week of up to $1 billion in added costs due to these detours, according to Reuters, a hit that will directly erode third-quarter shipping margins. The Financial Times reports that crude oil prices have surged by 7% in just a day to $98 a barrel after the latest Iran-backed missile strikes on tankers, and Bloomberg points out the International Energy Agency has slashed its 2026 oil demand forecast by 540,000 barrels per day as disruptions intensify. In the near term, shippers and energy-importing regions should brace for even higher freight rates and inflation, while prolonged unrest could cause persistent volatility in oil markets, squeeze the finances of developing nations, and push car makers, electronics firms, and retailers to overhaul their supply chains. Ultimately, if instabilities persist, confidence in regional energy investments may dwindle and global companies may accelerate efforts to find alternative trade corridors, including routes through sub-Saharan Africa. Business Insider reports that President Trump has finalized sweeping new double-digit tariffs targeting dozens of U.S. trading partners, dramatically raising the cost of imported goods ahead of Friday's deadline. Since 2018, the United States has intensified its use of tariffs protectionist taxes on imports as a way to remedy alleged unfair trading practices, with the Biden administration recently directing higher levies on electric vehicles, steel, and semiconductors to shield American manufacturers and rebalance trade flows. This latest round of tariffs has immediate repercussions. On July 26, Reuters reported a 25% tariff spike on Chinese electric vehicle imports, a move echoed by a sharp 3% fall in GM and Ford stock prices flagged by the Wall Street Journal. Chinese auto and battery makers like BYD and CATL, along with U.S. giants including Tesla and Ford, are all caught in the crossfire, while the U.S. Chamber of Commerce has now urged a policy rethink, warning that consumer electronics and vehicle prices could surge across the country. In the short term, American shoppers are likely to feel the pinch from steeper prices on imported EVs and gadgets, and further escalation could provoke Chinese retaliation, disrupt global supply chains, and undermine the long-term competitiveness of U.S. manufacturing. Growing policy uncertainty may also dampen foreign investment, challenging domestic job growth and economic stability for years ahead. TechCrunch highlights a new twist in the cybersecurity world. Advances in AI guardrails by leading developers are now making it harder for security researchers to uncover system vulnerabilities, raising controversy throughout the industry. Since 2023, tech firms like OpenAI and Google have rolled out increasingly strict software frameworks that block AI outputs deemed risky, such as requests for hacking tools or exploit code. These measures are intended to stem the tide of AI-driven cybercrime, but have also drawn criticism for impeding legitimate research into software flaws. Institutions like MITRE and Stanford are actively evaluating the impact, while the U.S. National Institute of Standards and Technology continues to update guidance for ethical AI deployment in security contexts. According to Security Week, Google AI's latest guardrails stopped over 1.3 million exploit-related queries within a single day, and an OpenAI press release says more than 5,000 user requests for proof-of-concept malware scripts were blocked just in the last 24 hours. As a result, threat actors are already moving to less regulated AI models and human-driven exploits, even as restrictions on mainstream tools slow the pace of academic vulnerability discovery and may heighten reliance on closed, proprietary technologies for both offense and defense. In the longer term, these dynamics could fragment the security ecosystem and reshape the landscape of digital risk management. Now, onto the markets. In international markets, Germany moved higher with EWG posting a daily gain of 1.31%. The United Kingdom advanced as EWU rose 1.13%, while the Netherlands declined by 0.92% with EWN. Italy performed steadily with EWI notching up 0.7% in daily gains. Spain also saw an increase as EWP added 1.17%. China's large-cap segment gained 0.35%, while Hong Kong climbed 0.49% and Singapore added 0.66%. India ticked up 0.82%, whereas Taiwan fell 1.83%, with EWT marking the most notable drop among major Asian markets. Commodities saw mixed moves. Gold edged up 0.1% and silver advanced 1%, but U.S. oil fell 2%. In the U.S. favorites, Adobe surged 6% as the top performer, with Microsoft nearly flat and Apple up 3.5%. AMD fell 3.3% and Oracle slid 4.2% on the day, while Intel declined 7.9% and ARM dropped by over 8%. In sectors, the S&P 500 was nearly unchanged, while healthcare and finance each gained under 1%. Real estate outperformed with XLRE up 2.2%, but semiconductors retreated over 4% led by SOX. That's it for today. You can find more news and details on our website. Goodbye.